Good evening, Oak Bloke here, and this is going to be on Goldplat. So, so I wrote about this back in January, and yeah, so it's kind of gold recovery with a little bit of platinum PGM recovery as well, based in South Africa and Ghana. They also have some operations in South America and are looking to establish a third plant in Brazil. Um, in Ghana, they've been there less time, and there's been some changes this year to restrict the export of gold concentrate. They've had to convert to export gold doré bars, so gold bars rather than gold concentrate. So that's kind of disrupted things, and they've spent some months investing and reconfiguring. So there's and back in January, I was looking at the numbers and looking at the outlook, and it was saying that sales were going to plummet, and there wasn't really any explanation. I mean, the explanation now is obvious that it was the changes in Ghana, but back then it was an enterprise value of 13 million. It was price earnings of 2.8 times, so super cheap. Earnings per share growth, price earnings growth, not amazing, but reasonable. Trading at a discount to its assets. So there was some positives, definitely some positives. I worked through it and also sort of tried to get a handle on what was going on with production and with like what were their costs, what were their revenues. So after sort of poking around a bit, I managed to get some insight into that, and also looking at the sort of cash and the cash movement. So that that was sort of how I sort of saw how things potentially could look for them. So some steady build. But the thing that spooked me was this thing about there was going to be some unknown disruption in 2025. So yeah, even though it sort of had some level of attraction, it also had some challenges. So you can see here, the a lot of assets on the balance sheet as well. So 38 million of assets reduced from 52, but this felt very, very high. It was like, do you really need to keep that much inventory, and can you not turn that into cash? Because if you turned that into cash, I mean, that would kind of be the value of the company pretty much. And as it was, they had 4 million of cash. So anyway, it looked like there was some moves to free up stock and improve the balance sheet. So there was also an upside here of the tailings that they own. So they reckon they've got 2.3 million tons of tailings that contain well, potentially contain 82,000 ounces of gold, but they say perhaps there's more. They've done some sampling, and it was more than 1.5 grams. So perhaps there's as much as 50% more. So they've got to they've got to work out. I guess they've got to sample and maybe potentially revise this. But also that they needed to build out a second tailings storage area, because if you're going to process your tailings, you've got to have somewhere else to put your tailings, the tailings for the tailings. So that was the summary as it was back then. So 12 million, trading at a discount, delivering a great whacking profit, should be a dream come true. But how much could and one day will translate into returns for owners if you strip out minority interests? There's quite a high cost of production. They're not getting the full price on the gold price. There's ongoing capex. They've had quite a bit of bad luck. There's geographic risk. there's the prospect of a 33% sales drop with no explanation. An uneasy feeling prevails. And I said, perhaps I'm overthinking this one, but I just need to get comfortable. I'll be paying close attention to the interim and so on. So anyway, we've had the interim. That's the interim. We've had the Q3 results actually. So there's been sort of two updates since my article, which was only 5 months ago. So yeah, there's been a few different updates. So has my opinion changed today? Well, in a short answer, yes, and this is why. So kind of the problem and the point I had within my last article was that things were getting stuck, but you know, are they going to take moves to unstick them? I now sort of look at this and think, well, actually, I can see a pathway through for that. Now, there's other things that have happened as well. The share price has dropped quite a lot. So this was, I think, 7.5, maybe 8p when I reviewed it back in January. Today it's 6.75p. The idea with this is that they don't do any mining. They simply recover gold from different sources. So you can see here they get it from things like liners, grease, carbon, Vley material, whatever that might be. Wood chips. So it's basically if you do watch Freddie Dodge and Juan Ibarra in their mine rescue, there were some guys that dismantled like a 1980s milling machine that they had on their property and found a whole load of gold. So I mean, this stuff's real. That it is a way to recover extra gold, I guess. So anyway, that's kind of what they do as a business. They basically just buy materials and get the gold. So that's and they'll take those materials back to their processing plant. So this is their South African plant, and then this is their strangely identically looking plant in Ghana. Either that or the photo's just a stock photo, and that's not the actual plant in Ghana. So who knows? So anyway, that's what they do as a business. So kind of key points to take from the Q3 results and from the interims were so obviously cash has dropped a little from four to 3. That they are telling us that they're focused now on converting inventory to cash. They also tell us that they are being super careful on cost control in South Africa. They're looking to grow market share for both gold and PGMs. They tell us of their confidence in so they say here, during the period we've had encouraging engagements, we are confident that we'll be able to increase our market share in Q4, supporting the supply of byproducts into the next financial period. So, this may or may not come through in the actual Q4 results, but it's always a good idea to buy ahead of, to buy on the sound of the cannons, I think as the saying goes, but to buy ahead of the actual tangible news or the tangible benefits coming through of the news. So I'm sort of taking that as one positive. They also tell us that they supplied material from South America into South Africa in Q3, and then that's being processed this quarter. So, and this was higher grade material. So that's, I'm taking the words strong supply of higher grade as being, that's going to be substantial, significant amounts of revenue coming through. They also talk about expanding expanding operations in Brazil. They've been talking about that for a while. They are also talking about the the TSF, which is the tailings project, cost management, market share. So kind of hitting all the right notes. So that kind of felt to me positive, 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 positive. Yep, okay, great. And then I saw that the price had fallen. So now part of this is the fact that obviously they've generated cash, and part of it is the share price has fallen, but the EV, the enterprise value, so that's the share price minus cash. Okay, so minus cash has dropped from 13.8 million to 8.56 million. So you're pretty much looking at what, less than a third, or sorry, more than a third from what it was back in January. So yeah, obviously that's tempting number. So and obviously none of this is advice. I'm just sort of talking through as I see it. You make your own investment decisions, but yeah, that when I looked at this before, that I found it very hard to believe that things would stagnate when gold prices were rising, and so we can see that things have got very, very bad. Things have dropped from a price earnings of 2.8 to 3.8, so that's earnings have dropped by about a third in the quarter. The price earnings growth has dropped from 2.66 to 123 times. So, like, in other words, there's virtually no growth. But yeah, like, all of that's negative. Of course, it's all negative, but there are some positives. So when I saw that they are sat on 11.38 million pounds in Ghana, and this inventory, like, what you've got to understand with this is that they have had to kind of suspend things because they can't sell concentrate, as I explained earlier on. So they've got all this backed up, and this is this Augustus Gloop picture, that imagine you've got all this inventory that's backed up, that once they've got their ducks in a row, once they've got their capability of producing doré bars, that number's not going to stay at that. It's going to come back down again. So you're looking at over 3 million worth of build there. And just to sort of be clear, that number there is, that number and that number combined is that number, 15.056 million, and basically 3/4 of that 15 million, so 11.7 of the 15, so probably about 9 of that 11.3 is actually gold, is just gold. And obviously gold is, I mean, you don't have to worry about the price of or it's going to become obsolete, or it's gold, it's like cash. And the other thing to say is that back when this valuation was done, so this is money, this isn't a quantity of gold, this is a price of gold. The price of gold was 2,600 an ounce. Today it's about 3,350, so it's 26% more per ounce. And they can free up at least 3 million of this. Okay, so there's kind of potentially something like approaching 6 million of cash that can theoretically come out of Ghana in, well, maybe it'll be this quarter, maybe it'll be next quarter, perhaps even it'll be December, the October to December quarter. But I don't want to kind of wait till then, because if Augustus Gloop comes popping out, I suspect that this will re-rate. So, but I don't know that for a fact. I mean, that's just my. I mean, I anticipate that will happen. The numbers appear to back up that statement as well. And then that's before the expansion, that's before the cost reductions that they say they've been doing in Ghana. So obviously that will be a benefit as well. There's also the fact that there was a $500,000 loss in the interims. So that's a foreign exchange loss. And that was because the Ghanaian currency, the Kedi, Sedi, however you pronounce that word there, that fell against the dollar. But post period, well, guess what? The Sedi Kedi has jumped against the dollar. The dollar has weakened. So you're also looking potentially at an FX gain. I mean, look how much it's moved by. I mean, it's a phenomenal amount of money. So the operations in Ghana, including the gold that is translated into US dollars, will all of a sudden not only have gone up in price, not only be able to be reduced, because they'll be able to reduce down their inventory because they've got backed up inventory, but thirdly, the gold, which will be valued in cedis and translated to dollars, will be worth a lot more. So you've got all kinds of gains there that are going to sort of reverse back out, like the Augustus Gloop. So yeah, lots there, I think, to feel positive about. And they say that they're investing another 0.4 million, so 200,000 on the expansion, and 200,000 on it's basically 0.4 of a million on Ghana. So they're beneficiating the material to gold doré bars. That will take place. That will take until September. So there's sort of another sort of 3-4 months of work. So as far as I'm concerned, well, that's near completion then, which is great. They're also saying that they are expanding the breadth of customers across Southern Africa, West Africa, plus taking on materials coming from Brazil. So that's all positive as well. Yeah. So I mean, the thing that annoys me is that they don't disclose what sort of volumes that they're operating with. So we've got no idea. Taking past numbers, that they appear to have a production cost of about 16 or 1700, but it varies, as you can see here. Oh, sorry, yeah, the ASC was 1600 in 2022, and then I think it was 1400 in 2023, or perhaps the other way around. But in 2024 was 1600. So it's like, it's not the cheapest to get these gold ounces. And also the other thing that kind of struck me was that when they told us the volumes, and they told us the revenue, that they were only getting about a realized price of 1940. Now that's not massively lower than the prevailing gold price at the time, which I think back at 3112 was that, but you are still looking at what, about 20%, maybe more, 25% reduction from the selling price of gold. So see, 25% off that, you're looking at 27, AISC of maybe 1600. So you're looking at 1100 an ounce margin. However, do bear in mind that that margin, 1100, will be a shed load more than that margin there, which is what, 343, if that's how the model works. I mean, they don't explain how they price and how things cost, and there's just not that level of disclosure. So I might be wrong on that, but I might be right. I mean, at the end of the day, the revenue from gold is the price of gold. I think what the deduction, or this 25% depends on, is the amount that the customer is taking. So yeah, anyway, just to summarize, I think there's some really good reasons why this could be an interesting share. I hope that's quick. This article will be published in the next day or two. look out for it. And thank you for watching this. Oakbloke signing off. And none of this is advice. This is just you make your own investment decisions. But hope you found that entertaining. All right. Cheerio for now. Cheerio.